Welcome, guys. This will be considered a pretty much beginner's master class, right? Something you should all need to know when you start to learn about charts, reading, and just learning the basic of how market structure works. Okay, so in the beginning, when I start trading, I use a lot of indicators and stuff like that. And tell me, that's just a lot of noise. To me, it's proven to me that indicator does not serve you well. Some do, some don't, but it's just a tool, and a tool that has lagging um, effect to it. So it's not real time. So it's always behind a move. Like if it's signaling go long, you're behind that move, right? And in the futures market, in real market, you have to react fast, or else you get a bad entry, which leads to stop out. So we're gonna go back to the basics so I can understand, so you can understand how the market works. So pretty much, this is how the market works, right? There's always gonna be a pattern such if it does go long, right? Market is not perfect. Let's say this is you see this as a long. There's always gonna be a high, low, high, low, high, low, high, low, or high, higher, low, high, high, higher, low, higher, high, right? That's how market is. It's not a single straight line. And then from there on, there's always going to be some kind of pivot where you want to capture that move. You always want to go long with the trend. So in order to do that, you have to trace down a pivot point. This we would call this a pivot point. A pivot point is where resistance and um, support will intersect, right? So let's say this market is going up, it hit this resistance, it rejected, it came back down, and now it's come back test resistant and finally broke above, right? So what you want to do is you don't want to just chase long here, right? Depending on the time frame, but normally, for example, person you don't want to chase long. You want to wait for the retest near the resistance pivot point, which somewhere down here, and then you want to go long. You know what I'm saying? Because now resistance has became a support level, and now you can go long the pivot. Same as, let's say, for instance, right here, same scenario. Market trying to go long, it came back down short, right? But then it bounced, it broke up the previous high pivot point, right? And then it came down, retest, and found support that was once resistance, turned support, and now it goes long. Now you went long in the market. So it works vice versa. And same thing. Let's say you decided to short, right? Market's coming down, making a low low, higher low, etc., etc. This is basically how markets move, right? So when you see something like that, you draw yourself a pivot point. See, I'm not imperfect. I'm just drawing this freehandly, but you understand. Market come down. You saw some support here, bounce, broke down again. Now market looking bearish. You're looking for a bearish entry. You're looking to short. Now came down, bounce. Came back here. Resistance is a pivot point. Remember, where once support will turn resistance, that's where you short. So it came back here, hit resistance, and now you where you enter short. Right? Pretty basic. Let's say you miss this move. Well, let's try to catch the next one. Right? Came down, support. I'm up here, resistance, some pullback. Okay, all the way down. You did not chase it, right? You wait for it bounce back here as a resistance level, and then you short. You enter here, you short. Right? It's patience. That's all it is. It's waiting for patience, waiting for a confirmation, waiting for a certain candlestick pattern for you to give you confirmation to go short here, right? And later we'll look at the real life example of how that works. But that's basically it, right? The market will always have some kind of when it boils down to it, there's always going to be right here a what's this? We could call this a resistance level, right? I always look resistance and support. resistance and support. That's how I look at it. See, some people supply, demand. It's all words terms here. I just say resistance, support. Make it simple for me to understand. Right? There's always going to be a point where markets, let's see a resistance area, maybe coming down a little bit, and then come back down. And there's always going to be a support area where it comes down a little bit, come back down. So basically, there's a resistance support level. That is where you want to enter and snipe your entry. Markets are the same. Every market is same. Whatever you trade, there's always going to be a support resistance. Now, let's just look at MNQ futures. What I really trade. Let's look at the market. Let's go back into the daily. I took all the indicators out of nothing. This is just looking at charts. Now we can see that market is definitely in a range. A range is where a lot of trader fails. This is just scary times. When market is ranging, you don't get that easy high, low resistance point. It just range in the middle. So when the market is range like that, you only thing you can really do is pick the top of the range and look for short, or the bottom of the range to go long. It's the same thing. Support, resistance, right? Support, resistance. It's just a bigger box. But now we're in a daily time frame. We don't trade on a daily time. We mark our levels on the daily time frame because high time frames have stronger level. It means more. That's why I look at it. With higher time frames, it means more. There's more confluence to it. There's more time has passed where institutions and hedge funds will make their move already. So it means a lot more than a 1 minute time frame where it doesn't mean as much, or anything lower than that, right? So look at anything higher time frame to mean higher. 4 hour time frame give me more weight. 1 hour time frame has more weight. 15-minute time frame has more weight than a 5 minute time frame. You get what I'm saying? And normally when I do it, I do the daily and then drop down to 4 hours and then look again. A high time frame. Just looking through this market, what do you see? It's more chop here, but do you see any interesting level? Yeah, we see some interesting level right here. Right? You can see that there's all intersection resistance again from this level here on out. Right? We don't need to look this far back now. We can just see this far back is enough because all you need to do. There we go. We see a little bit more support resistance level again, right? There we go. From this range, let's say you just track from here to here, and now you're trading within this range in the 4 hour. You see that every time prices come down near this possible support, there's going to be a bounce, right? Let's say you miss it, but now the next step follow up, you see, oh, look, hey, it's coming back to that resistance level again. I can short here. And if you short here, what happened? Yeah, you would have made money, like a lot of money. Okay, because you see that there's a lot of rejection up here, a couple of times already. It came back down, and we're in this range. Well, oh look, it test came back down, and look, oh look, support here. It came back down, support. What happened? It bounced. Do you see what I'm saying? This is how it is. And let's say you break this down even further to 1 hour chart, right? It's the same thing. It's the same thing in 1 hour. Just you probably get better entry, right? And then you drop down to the 5 minute, you can see clear where where the candle makes its move, right? Let's remember we waiting for the top. Zoom in. This is where top happens in short, right? And now when it came back down to the resistance zone area, we see support come in, bounce. This is where it really came down here to the right. It came down, bounce, came back down again, bounce. Right? There's plenty of moves come, but we saw that zone presented a good support resistance. Okay, that's an example. So understand that this is how market will move in a range bound market. This is how the range bound market moves. We get that support resistance level. and we just trade within that level. We wait for market to come down towards that level, and we snipe our entry to go long, right? And let's just say, some days you just can't wait for it to come down that far, right? So then you want to break it down even further to micro intraday trading, like something where, okay, I don't have the patience to wait for a market to come. Like, so if I'm seeing it up top and I want to see it come back down here, I know it ain't gonna happen one day, right? And or 5 minutes, it's not gonna happen for me. And I want to take a trade, and I can't wait for, let's say, 1 day, 2 days to pass for it to come near my support and never touches it. And then I was like, I can't trade. I know it's near my entry, but it never come down to where I see retest. So I don't feel confident about it, and I can't wait a couple more days, right? Just for it to for that entry to happen. Let's say just you're not patient. Well, this you can take entries in the shorter time frame, because in the intraday market, okay, we're looking at intraday. At least we have a long time frame level. We can look at intraday to make a trade. Still, this is the 10 minutes, right? And this is 10 minutes here. What do we see here in the 10 minutes? Low time frame. We see that there is possible support here. This was possible. This is long time frame resistance. This is become a support level. So now that you know that, hey, market coming down, they see a little bit of support here in the short time frame. This is possible shorter time frame resistance, because we see that price rejection up here, right? So within this zone here, you could have a trade, right? You could have had a trade in, and this is just intraday. Intraday support resistance. It happens just like a longer time frame. Intraday, there is also support and resistance. So we're in 10 minutes. Let's drop down all the way to 1 minute. Let's see our levels there. It's hard. This is so hard about it when you're doing live, not live, but recording of your chart. When you chop down, the chart just goes berserk, and you gotta find it. I'm on TradingView, by the way. This is the trading platform I use a lot to chart, and for most trades. We're here. Here we go. We found our example, right? Here we go. Price came down, right? If you saw that found a little bit of support, you weren't gonna go long yet. You're like, this is just, I'm not gonna catch that knife. But let's see what price action does. Price can bounce up here. Okay, now you're like, okay, well, that looks like a good support. I'm gonna wait now. I'm gonna wait for it to come back down and test that level, the zone again. This is the zone. And if I see some kind of support again, I might go back long intraday. So the 1 minute candle, you see the structure. The same thing was the structure here, structure down. These keys come down, come down, come down, and come down, come down. Oh, here we go. In the support zone. Right? Now it's in the support zone. Now you're seeing candlestick pattern play out. You're seeing here's a wick, hammer, another hammer here. And then finally we got three candle, we call three white surges long. Let's say, okay, cool. That's tell me there's a lot of things tell me to go long. I'm gonna go long here at this third candle long. You set your stop at this previous low. You're aiming for 1 to 2, right? 1 to 2 at least. And yeah, you would have made money right there, 1 to 2. You enter long here. You hit your stop down here. It never came back to your stop. Or stay, and then it just bounced. You would have made money, right? 1 to 2. Same thing. Now let's say you didn't catch this move up, but you still understand the concept that the market moves, how it moves. You follow the trend, right? The short trend now is coming back up. The same thing. You just kind of mark it, right? You mark it. You just mark the levels. Back up, come back down, touch. You go back long, right? Because market has to come trace. There's always a zigzag move. Just remember, it doesn't always go in a straight line. There's always gonna be a pullback zigzag, and then you have your entry point. You know, or let's say you missed it there. You want to catch a smaller move. Remember, up, down. This became a small resistance. It came back down. broke the resistance, wait for it to kind of come back down near the resistance area. So it's an indication for long. What happened? You go long. Let's say you went long there. And you have your stop at that resistance level. You get one or two. You got more than one or two. You can definitely get one or two there. Just a small move, but it is a profitable move. That's just from you trying to chase a move, right? Let's say you're like FOMO in, like I see you coming along. I think I can capture a little bit more size of it. This is how you do it, right? This is not much, but it's enough to make you money in the futures world. But you can see how price action respect, right? Let's trend. Like it came back down here, right here. Good, no entry zone for long. Yeah, it's the same thing. This was once resistance, now has turned into support zone, right? And it will do that until it does, until it fails, and then you're like, okay, now it fails. Damn, you're out. Same thing. Let's say it went up here. Now you see that it's trending down. You're like, okay, I want to continue this lower. I want to short because here it looks like a big short. I want a continuation short. So, and then because I didn't catch this, I'm waiting for a pullback. I see there's resistance here. Now it's forming another of those pattern. Obviously, you can't find the first one, but you see the second. You see a pullback. Now you see the pattern forming. So what you mark levels, right? This was possible support here. Came back up. Resistance. Broke support, but better came back up. Again here. It formed another level of power resistance here. That's where you want to short. Right, you're just marking level, see what's more interesting to you, and you can always move it down as the new candle form to see there's other form and patterns. So right here we see that there's a resistance level, came back down, support here, resistance level again. So you can take a snipe entry here, right, right here as a short, because we know that there is a lot of resistance up here again in a short time frame. So you're like, okay, I'm gonna short here, I'm gonna snipe this, I'm gonna go at least one or two, right? Or just aim for this low, and you would have at least got your move for sure. Because market came back down to this bigger zone of support. You get what I'm saying? So that's how market moves. You understand its market structure. Once you understand market structure, you can make more probable move, and then all I have to do is just wait for that zone that you mark out to play out. You know, keep things, as long as you keep things simple, trading become really easy. As far as market charts and reading patterns, stuff like that. Now let's add what we just learned and use some indicator. So right here I have the 9 EMA cross price action, right? It gives you a clear ribbon. And then I'm gonna add VWAPs, two basic ones. Here's the blue line VWAP, right? We're still under the 1 minute time frame. We're still using the same example as earlier, but just put things in more context. We know this is a short zone, right? We just mark that out. You see, so now that you add indicators on, remember, most indicators is just a lagging indicator. It predicts to move late. It predicts to move late. But we see that if you add indicator, it gives you a clear view of the market. Right now, it's like, oh yeah, I see red ribbon. This market's pretty short, right? And then green ribbon, okay, it's kind of buying up, kind of bullish. And I see VWAP here, VWAP line right here, price right here. This is VWAP. Ending on the VWAP is considered bearish. You want to go with the trend. You want to short, right? So in this instance, when you look at a chart like this, you're like, okay, in my mind, I just want to go short. I don't want to go long, but I want to find a place where I can go short. Okay, so if market is shorting right now, and you didn't catch the move, and you're just waiting for it. Okay, see support here, it came back up. Now you're like, okay, now I want to see it come near to VWAP before I see rejection, right? Or somewhere there is some kind of resistance where I can take an entry short. So market is coming back up. You can see it. It's possible. Right here, resistance here. We near the VWAP. Near VWAP. Here's possible resistance where it will reject. And you wait it, you wait it, you wait it. And finally it came back here. Where, okay, I'm finally get that little move I got. Coming back here near VWAP. And I'll take an entry short here. And you would have gotten it, right? Anywhere up here and have you stop at the VWAP, you would have made some money. You had to wait a long time, but that's how it played out. Or, you know, you can look to play the bigger range. And this is better, smarter move is wait for it to come back near support and go long. But that's about it for today, guys. And I will see you guys next time.